yes, but you want to check out Addicted to ROI would be the one for you since you're not an agent.
Okay, thank you.
Good stuff. Good stuff. What else? Dion, how was your trip, man?
It was good. It was crazy. Rained nowhere until I came back to Washington, of course.
Yeah, well, maybe rain is good this year. We don't know.
Right.
We'll laugh. What'd you guys do? You guys get a flat tire or something straight out the gate?
Right out of the gate, the truck broke down for 3 days because of electronics.
Oh, that's awesome.
Stuck in the middle of nowhere. But the rest of the trip was went really well.
Super. What was your favorite place that you went?
Probably Florida, I think, out of everywhere. We pretty much hit almost every state except for California and New York, which are the only two we stayed out of.
Yeah. What do you mean? Oh, you drove?
Pretty much everywhere else.
Wow. Dang, that's some miles. Did you meet any real estate investors along the way?
I did. I kind of hooked up with a few from the YouTube channel and had a couple dinners with people, and that part was fun.
Yeah, good stuff. Well, Florida's full of all the OG old schoolers, right? All those guys down there. You didn't get to hook up with our friend Kevin, did you?
No, timing didn't work out for that.
I hear you. Awesome. Well, good stuff. Hi, Mickey. I'm Julie.
Hey.
Hi. Welcome. I don't know if we've met before. Are you, what's your discipline in real estate? Are you an investor, an agent investor, landlord?
Investor, just moved up here from the Grand Canyon National Park about a year ago and live in Oak Harbor, Washington, and had rentals in Flagstaff, sold them, and now are in the process of buying condos here.
Condos? Why condos?
Because I like to not have to worry about stuff. And there's a Navy base up here, so everybody just wants, they're young. It just works good for us.
Awesome. So you're looking for like Kitsap County or?
No, this is Island County.
Island County. Okay.
Yeah,
Island County condo.
We're in the process of buying our first one. And my daughter's a real estate agent up here, so she suggested you guys. And I just have some questions that I was hoping I could get answered.
Sure. Yeah. You should join some of our real estate investing communities and say you're looking to buy condos in Island County. I don't think anybody else has ever said that. So you have a lane all to yourself.
Oh, there you go.
Might get people sending you some leads.
Yeah.
So I imagine you might be able to buy some right off the MLS as well. So cool. Well, what can we help you with today? What throw it out there?
Oh boy, I just thought I'd just be listening in. We're concerned, we sold our condos before all of the crazy COVID started. And we're concerned about the eviction moratorium getting extended or, just the risk of all of that.
Yeah, that's legit, right? So you cannot, to my knowledge, and go ahead, Keith.
I was just saying too legit.
Yeah, that's too legit to quit. Is that how we're going now?
Yep.
We're old. We're back to MC Hammer days here. Yeah, no, that's a legitimate concern. I wouldn't say it's a concern that you shouldn't move forward and take action, but you just have to know what you're doing and understand how it works. It's kind of like understanding the rules of engagement on anything. And as long as you understand, that part of it, how long to make your lease term that and some of the rules around that and what happens if you want to give them a rent increase or that sort of thing. You'd have to go to Island County's website to confirm whether they are still prohibiting evictions due to non-payment of rent. We have a really great attorney resource for you.
That was my next question. Is we had an excellent real estate lawyer in Phoenix, and I'm just looking for his equal up here.
Yeah, we can hook you up. I mean, you have to do your own due diligence, of course, but we can give you a name of a law firm. They're in Tukwila, Washington. They're called Dimension Law Group. And Caitlin Jackson, Joe, maybe you can drop her contacts down into the chat at Dimension Law Group. is our go-to right now for tenant landlord stuff. In fact, if you guys haven't yet figured it out, did we drop that one live yet, Joe? Caitlin's, right? Maybe you want to drop it in the chat here. We just published a webinar that we did with Caitlin for free legal advice for you guys on exactly the new rules and laws related to tenant landlord. It's not confusing once you get it, but it is something also that we talked about last week. Just as a heads up, everybody, and most of you know this, that we record these masterminds every week. And it's free to show up here and join in the conversation, but they're also recorded. And if you become a member of Seattle Investors Club, which costs $220 a year, best $220 you'll ever spend, you get access to all the recordings that you can watch on demand.
Excellent.
And so I think it was last week's discussion, we're trying to do our best to start labeling the videos or the whatever. You know, Joe, I don't know if Joe and I are going to have a meeting right in front of you guys right now. Okay. Joe, I think that if there was any way for while you're listening that you took notes and literally time-stamped the videos, that we were able to timestamp these videos with a little notes of stuff that you just make up as you're listening as we go, it would be of high value to our members. Because for my own VIP education community, I have a private broker coaching community. I do a bunch of videos and stuff for them. I also use some of our own SIC videos to share with all the brokers that I coach. And that's the feedback that they really would like to see timestamps. So Dion, you too, if you're not, are you already doing those on yours?
The only issue, guys, is that Zoom does not allow you to see what the time is when we're doing these recordings. And it's been a huge complaint actually for years. They don't seem to care. So we don't know unless we rewatch the whole video and then put them in after the fact, or take them out and then put them into an editor and then kind of try and timestamp. I'm sure that Dion probably does that for his as well. I know I do it for all of our podcasts, but it takes a long time.
Maybe we can hire a VA or something to do that. That might be, if it's not that much money, we could hire a VA to do that. Maybe we're having a meeting in front of you guys. So anyways, it's Mickey, right? You should go to the Seattle Investors Club YouTube channel. On YouTube, search Seattle Investors Club. Subscribe if you feel like it.
You bet.
And you will be able to watch a webinar slideshow all on this important topic. And then once you do that, come back the following week and say, I'm still confused. Let's talk about it. And we might end up talking about it today, but that'll give you a head start.
Sounds great.
And so my opinion as an agent investor myself is don't not pursue purchasing rentals because we're worried about tenant stuff. Just learn how to engage properly. It's really not that difficult. It does require here's the number one thing you need to know. Do not ever let anyone get on a month-to-month lease.
Okay.
Month-to-month equals bad. It used to mean good. But actually, unless you're going to move into it, right? If you're going to personally move into it, then you can give 90 days notice to do so. Or if you want to sell it, you can. But in order to, otherwise you want to make sure if you ever want to be able to give somebody a notice to vacate, not an eviction, but a notice to vacate or a rent increase if they don't accept your rent increase, then your ability to give them a notice to vacate, you need to make sure that you're on a lease, not month to month. And you need to make sure you're going to watch that video. And it's always important to understand that all notices need to have an expiration date on the notice. And they need to, I believe, for notices to vacate, rent increases and all that stuff, end on the rental period end date. So if your lease goes from the 1st through the 30th, right, and you're trying to give a 90-day notice and you give it on the 14th of the month, right? That needs to expire, let's say, in 90 days. If you make it expire 90 days later on the, 14th of whatever month, and that didn't expire then on the end of the rental period, and you'd have to start over. Okay. So end of the rental period for notices expiring is important for everybody to understand.
Could I mention one thing I saw? You said it was a 90-day if you share a common kitchen. The notice that my attorney just sent to me was actually a 20-day notice. So
if you share a common kitchen, if you live there,
common kitchen, right?
boarding house style, and you live there.
Well, what constitutes living there? Like if I have a room, but I'm in Asia for 6 months,
Are you
right?
getting your mail there?
Yeah.
There you go.
That still counts. Okay.
I don't know. That's ask your attorney, but I doubt, unless you have a bunch of savvy roommates, right? I don't know. That'd be a question to ask your attorney, right?
Yeah, just curious. So.
Yeah,
Ian's got all the deep questions.
that is deep even.
What
That's
is
deep.
yeah?
I don't think it's like, if there's like some, isn't there some hotel thing? Like something about if somebody stays longer than 14 days, it's considered I don't know, something like that.
It was my understanding at 29. If you exceed 29 days of occupancy, then that's why. Who was it? Seamont was like in Airbnb stuff. You want to have your rentals be 29 days, and then you physically check them out, and then you check them back in. Otherwise, they get tenant rights upon 30 days.
Right.
Can
So-
I ask another question? Did I interrupt?
No, go for it.
How do you guys feel about automatic withdrawal versus writing a check? Because, if they're not paying, they could pay $1 and then they're, automatic withdrawal and then they're back in with the lease. Do you guys do checks or do you do?
Oh, that's a good one. I think everybody here tries to do like these automatic online payments because it's easier for their bookkeeping, but that's a good point. We'll let Ian, Dion, these guys have a bunch of rentals. What do you guys think?
I have my bookkeeper. They pay like checks and money orders to my bookkeeper, and she runs it. And if they are during the eviction, she doesn't run it because if we take any money during the eviction, you have to start over.
Right.
Yeah, it's one of the drawbacks to accepting rents with things like Venmo, PayPal, Cash App, Apple Pay. It's a little more tricky to stop somebody from paying to continue if you have that problem going on. Most of the people that I know and work with, they receive their rents that way anyways, and it's not really been a problem, but it can be.
That's a good note today, Joe. Online rent payments versus check, pros and cons. Joe Bauer as a note today. Cool. Good one, guys.
Okay.
So we didn't actually answer your question other than you're right, it could be a problem.
Right. The tenant we're assuming does that. And in Flagstaff, we always didn't do that because of that issue of they could pay $1 and then they're back in on the lease, if you're trying to evict them. But
I actually think it might come down to your tenant profile a little bit too. I mean,
Are you saying millennials don't have checkbooks?
Yeah, I'm saying
Are you
that,
saying millennials
it
don't have
depends
checkbooks?
Yeah, it depends on, if people don't want to rent your place because they're forced to write you a check,
right.
that's, you'll have to make a business decision on that, I guess.
Right.
If they don't want to write a check, they could get a money order.
That's right.
Yeah, or a cashier's check.
That's right.
But that requires them to do something, doesn't it? It's not.
Shows they're invested in the transaction. That's good.
There you go. What else is happening? Anybody else? Great questions, though.
Well, mortgage rates took a dump and will continue to dump. So if you got 2%, be happy. We won't see it again.
Where are you at? 3.5?
We'll get there. But we're going to peak back over 3% here by the end of next week. I'd imagine between now and then.
I think it's funny. Cry me a river, right?
Right, exactly. You know, so Powell yesterday at the end of their meeting came out and said, hey, all the economic indicators are pointing to no more Fed buying bonds and mortgage-backed securities and corporate debt. So they didn't give a time specific, but they said more than likely quantitative easing will stop or will start tapering this year. So then that put a panic in the market at the end of yesterday, and then today the market opened up a half a point off, and so and it's continued to deteriorate all day. So it'll just, we'll see. I mean, what that means is the Fed's not going to be at the window buying mortgage-backed securities and other bonds, and that means the private market has to pick up what the Federal Reserve's been doing to the tune of 40 million or 40 billion a month or a week, excuse me. And so is there enough capacity out there in the private sector to take on 2 3/4 mortgage money, or are they going to want a higher rate of return? And they're going to want a higher rate of return. So rates are going up. So it's finally here.
Oh, well, there you go. And when do you think that's going to happen? Daniel says what, next year? Did you say, Daniel?
What? Easing?
Yeah. Well, rates going up.
Right now.
Oh, sorry, no, Mike. Oh, right now, pronto.
Yeah, right now. I mean, our rates changed 1/4% in rate today. We've had
Gotcha.
2 rate changes today. So
Gotcha.
we'll continue to see this happening.
Are you seeing anybody bang up against their ceiling though, you know, where that's going to make a difference for them to get disqualified? I guess with the crazy market that we have where we had an offer last night go mutual on my VIP team, and this agent would not, I mean, I'm like, well, I can't understand why they are not, we're giving them the roadmap to secure this transaction, and they will not do what's required, which is the 22 AD. And I believe it's probably because they were trying to offer so much, they were banging up against their ceiling on their payment.
Or they don't have the assets available.
No, they did. They could simply lower their down payment. Their down payment was like 24%.
Then they have a dumbass of a loan officer.
No, yeah, no. I mean, we called the loan officer and explained to him how easy it would be for the borrower to secure this deal with a 22 AD, which is an additional down payment money. And they're like, no, the agent was like, no, they won't do it. I'm like, why not? I mean, it's a tit for tat. I mean, it changes your mortgage payment by $30,000, your loan. That's a very small payment. So I think, you know, because properties are escalating still so much, people are ramming up potentially against their ceilings, maybe. I don't know. Is that a thing? Do you ever see?
Well, I had a client who is just adamantly against the AD. Like, look, if it doesn't appraise,
and they're adamantly against owning any property in Seattle.
That's what I told them. I'm like, yeah, don't hate the player, hate the game, right? So if you don't want to do that, you just have to understand from a terms and conditions standpoint, you're not the strongest offer on the table.
Yeah.
Okay.
We took an offer $30,000 less than the highest offer because we don't think it's going to appraise. And it came down to, well, no, what do we think it might appraise at? And where are we going to get with a 22 AD versus not having one and having to argue about it later? Right. And it just made sense. And a seller already won huge, you know, because they got $100,000 over their list price. Right.
Yeah.
So stupid counsel by these agents.
Well, but it's interesting that you said counsel. There's a lot of agents and a lot of mortgage professionals that aren't counselors, that aren't advisors, that don't actually model it out and say, hey, yeah, if you drop the 80 this way and you put that extra 50K here and your loan to value goes to an 18% down payment, this is what your new payment would be. And this is how it would all wash out.
Right.
If they don't prepare their clients that way,
right.
Then they're just stuck with the preconceived.
Well, that's what my team does is we coach the other agents and we even call the buyers lenders and we say, did you go over this? Mm-hmm. They're like, yeah, we're aware of that. But I don't know what's going on. We're getting sidetracked here, but yes, it's Dumbo stuff. So
well, can we talk about that really quick? Just
sure.
Why are listing agents not wanting to talk to the lender anymore?
I've not heard that. Everybody, I have 40 agents with me and they all call the lender.
I'm calling listing agents and they literally go, look, we're not going to take your lender calls anymore. And I was floored that she said that. I go, why would you not want to hear from the lender on the offer that you're trying to get your seller to take? Do you want to be blind to this aspect of the transaction? And you know what she said? She goes, well, your offer waived financing. I'm glad they waived financing and that if the financing failed, you would get the earnest money in that case. But do you not want to understand that financing would still be an intrinsic part of this transaction? Do you not understand that? And anyway, it was very interesting. I've heard that from a couple buyers agents, that listing agents are asking the buyers agents not to have their lenders call.
That's
and
weird.
I just thought that was weird to me.
But you bring up a for those of you that are interested, for those of you, Fly Homes is, do you guys know Fly Homes? Fly Homes has this cash offer platform, which is kind of like a bridge loan. And that is going to be made available to agents. So just letting you guys know, if anybody wants to know about that, call me. But, it's interesting because I think actually, in regards to that Fly Homes cash offer stuff, Keith, you'll probably be happy to hear this. Because strong buyers are waiving their financing, right? Mm-hmm. It is sort of, in some ways, it takes away the appraisal risk. They still have to get their loan, but you can figure out if you talk to the lender, whether they're super qualified or not, right?
Yeah, you sure can.
If
you talk to the lender.
Right. I feel like there are some limitations with the Fly Homes cash offer platform that actually make just being a strong buyer and waiving financing more attractive to a seller. It sounds crazy, but because there is a big appraisal risk for a buyer who uses the Fly Homes, a potential appraisal risk to the Fly Homes buyer who uses that platform, okay? Where when you're dealing with a buyer that just waives their financing, they are taking on the appraisal risk, okay? That buyer is taking on the appraisal risk. The way that Fly Homes, I believe, operates their situation, it would mean the buyer is still taking on the appraisal risk, but there is no appraisal during the process. Okay. And so they don't actually get to learn what that appraisal shortfall might be until they are refinancing their loan and have a potential foreclosure looming over them if it doesn't all go well. I mean, it's a little bit more of I feel like it's a more, the process needs to be managed much tighter for those buyers. That's all I'm going to say about it right now. But because we're not here to talk about all that stuff, but just so you know, if you guys are anybody who's operating like that, let's go ahead and call me. We'll talk shop on the side here. Well, cool. What else? Hey, Holly. What's up? Can you hear me?
Hi, how are you?
Good. Sounds like you found yourself a hoarder house.
Oh, sweet.
Oh, yes. Yes, we did. You must have heard about that.
I did.
You should call Dan McCleary.
Who's Dan McCleary?
His first investment property that he bought was a hoarder house. And he goes, the one thing that I horribly underestimated was how much it was going to cost to get rid of all the junk.
Yeah.
Yeah, I have a couple of those that I've been to and also have been working on. And it's definitely a process, especially if the person is still in the property trying to let go of their stuff. So
right.
We'll see how that situation goes. The
real estate is the easy part. That's like done deal. That could be done yesterday, right? Holly, you know what I mean? And we have some VIP members that would be interested in that is all I'm saying. So, let's talk about that if you get that far. Okay. But the issue is that the seller in a hoarder house, while you guys are investors, right? The issue is the human part. That's the hard part to get over. That's the time drag on all this, is the human part, right? With any seller, any lead, the human part. Real estate's all the easy part. Wouldn't you guys agree? It's the human part that is the hard part on all the transactions, whether you're a investor, agent, or property manager or whatever. You know, people got to know where they're going and be willing to go and have some place to go, or, you know, that sort of thing. So I know myself, I spend all my time up front after I give them information or talk to them about trying to assist them with that piece of the pie, because nothing can happen until that is resolved, right? Unless it's a buy and hold and they're going to stay there or something like that. Right on. Hey, Dante, he might be a good one. Ian, you guys know each other? Where's Ian? Ian, you and Dante know each other?
Nope, I don't think so.
Hey, Dante, Ian is in a, I think as you are, a rent by the room live-in situation. Aren't you in that situation down in California?
Yep, LA.
Yeah, he's in LA, so maybe the rules are different. I don't know, but Ian, we were talking about ability to evict people when you're actually an occupant with roommates. Go ahead, Ian, you guys tell them what you said.
Are you talking about the, I guess.
What your
Yeah.
attorney told you.
Yeah, so from what my attorney said is if you share a common kitchen, that month-to-month law doesn't apply.
That's in
So you
Washington.
Yeah, in Washington. So I can just give them a 20-day notice to terminate the lease, which is pretty big for Washington. Otherwise, it's like you have to give a 6-month extension and then another 6-month extension. So I don't know how it is in California, though. I don't know if it's the same.
Yeah. Do
same
you
law.
guys have tenant landlord craziness down in California, Dante?
From what I hear, it's similar, but I haven't had any issues yet. I've been taking care of it in front end, just being super careful who I put in there.
Yeah.
No
Good
issue
thing
so
for you to
far.
follow up on, though, right? Is to see if you have some advantageous noticing ability if you ever were to get in a jam, because if you live there and share a kitchen or whatever the rules are, you might get an easier hallway pass, if you know what I mean.
Yeah, if I'm having an issue, I don't live there anymore, but I could try to move and then try to do that or something. But I do know that I think after my lawyer told me something about, I think it was either after 6 months or after a year. I think if they have been there longer than a year, I have to give them a 60-day notice, versus under a year, which would be just 30 days or something like that.
You know, that's an interesting point you bring up, because a lot of people here, like I said, want to potentially invest out of state. And each state and each county, each whatever, is going to have its own tenant landlord rules. So that gives me an idea to partner up with Jennifer and host information on whatever the most popular places maybe that people are investing out of state in, and not only just cover, like we just did, the Washington rules, but, you know, whatever the most likely out of state, you know, top 2, 3, you know, or second, whatever people are investing in out of state, have that same topic covered for that area, because it could be totally different, you know. And that's the risk, I think, in investing out of state these days, is before you do that, you need to understand and harness and totally understand their noticing and eviction rules and their rent increase rules and their, you know, required minimum leases and all that stuff, right? I mean, we've got to be one of the toughest out here. So you know, take ours and see if those same rules apply somewhere else. I don't know. Alex, you know anything about that with investors investing out of state that you're helping?
I mean, for the most part, most of the investors that we talk with that, you know, want to invest out of state, it's not necessarily because of, like, you know, tenant friendly or landlord friendly rules. It's more like they just want better cash flow. It's like just the numbers just don't work so great for them here.
Exactly. But I'm wondering if there's a layer on top that, let's say there were 3 markets that were people, 3 or 4 markets everybody likes to invest in out of state. If it were me, I would take, okay, well, they rank this way in cash flow or appreciation, and then I'd layer on top and who's got the shittiest or easiest tenant landlord laws to deal with as well. And maybe that would push me to one market versus another, if you get what I'm saying.
Yeah, I mean, I pretty rarely hear that being a major driver because, like, you know, when you look at it, right, for the most part, right, landlord-friendly states versus, you know, so-called tenant-friendly states, they do have pretty dramatic differences in, you know, like, you know, values of their properties and such. Like, you know, you think of like stereotypically tenant-friendly states, right? You've got Washington, you've got Oregon, you've got California. Very, very different value points versus pretty much almost every city in, say, Texas, you know, Georgia, North Carolina. I mean, yeah, if you go to like, you know, downtown core areas or like, you know, really nice neighborhoods in some of those cities, yeah, you'll get comparable values. But, you know, for the most part, right, investment type properties, they're just not going to be comparable.
Almost all of the investors that I hear always talk about red state versus blue state. And they say red states are more friendly for landlord, blue states are more friendly for tenant. But Grant Cardone was on Bigger Pockets a couple of times. And in one of his interviews, he actually mentions why he prefers blue states. More regulations limits growth, but causes appreciation. So one of the reasons why Seattle, Los Angeles, San Francisco have so much appreciation is because you can't build to meet supply. Yep. So when somebody's looking at investing in another state, cash flow happens from in those states that are landlord friendly, but appreciation is happening in the tenant friendly states.
Right.
Another interesting thing is that these kind of bigger cities that have population problems and not enough affordable housing, they're a little bit more flexible in how they enforce things. So I have 9 rooms that I'm renting to, and on paper, I don't think that's illegal, but I've literally called the city and asked, they don't enforce it. They have a problem with it, enforce it when I'm providing pretty good housing and people like it. There's no issue. So you get away with that. And you're seeing it in California more too, where very slowly cities are passing more regulation to ADUs, junior ADUs. California just passed 2 different bills. For
to welcome them?
What's that?
Are you saying to welcome them?
What do you mean? No, to help with the affordability problem.
Yeah, they're making it easier to have ADUs or DADUs and stuff like that. Yeah.
Right. So long term, I think I would side with the appreciation and the future change in laws that would help me be able to do something more to the property. But that's a little bit of a bet too.
I always think, well, maybe you invest in cash flow until you have your monthly nut plus your cushion covered, and then once that gives you the freedom and that you can make, you know, your own choices and have your own time back because your bills are paid by your cash flow properties, then you focus on, you know, the appreciation game. But I don't know. Everybody has a different.
I actually think that you can get cash flow and appreciation at the same time. You know, for instance, my Pittsburgh property, I purchased that for $19,000. I sold it for 75, and then it was relisted. I'm sorry, 79, and then it was relisted for 160, something like that. So it cash flowed really well, but also appreciated it in value. And you can actually
do anything to it, Ian?
Oh yeah, of course. I mean, when I purchased it, I put $10,000 in renovations.
Right, but
you know.
So that's a different conversation though. That's a BRRRR conversation, right?
Well,
that's an investment strategy. But if I was thinking the conversation, and I'm glad that you went there, but I was saying the conversation, if you had money to invest, do you go invest in appreciation or do you invest in cash flow? And you're bringing it in the middle.
Yeah.
Buy both.
Yeah, I think you can get appreciation and cash flow if you buy in the right area.
Let me ask you though, is that a war zone at a $19,000? I mean, how much management pain in the ass? Like there's that other little layer there of, you know, how big of a butt are you in?
That is the thing. You need a good team. Otherwise you're gonna manage it's difficult to manage, especially if you're getting over 10, if you're trying to do that yourself, then that's very difficult.
Right.
But I would purchase in Washington too, although I'd be kind of reluctant unless it's something really good because of the laws here. But my Georgia properties, I believe they've appreciated a little bit as well. But I would say, yeah, Seattle does appreciate faster than than some of the properties that I've, in Georgia or.
Well, I think there's some people here that just buy, for, like I said, yeah, there's not much upside and they're just meaning to sit on them, and I don't know if Adrian does that. Chu, Adrian do that at all? Does anybody know? Is he kind of, not at all? He's always got some forced value in there, right? Yeah, okay. Exactly. What's up, Andy Young? Pops? I'm going to call you Pops. Andy had twins. I have twins. Andy had twins. How old are those little buggers now, Andy?
20 months old.
20
Wow.
months old.
It's frightful.
God, mine are 13 and they think they're 20 years old. Yeah. Yeah. Boy, good luck. It's so fun. What's going on with you, brother? Andy, did you, where are you at? You have your, what is it, Bellingham apartment that you ended up, refinancing? You still have that?
Yep. Refinanced that thing. Just moved into our new house that we got off market. Been renovating for the last year. And yeah, so moved out of something that we've owned for a while, re-rented that, and just have this property now that we moved into that we're refinancing out of the seller finance that I had it in for the last year and a half.
Oh, nice. Well, unfortunately, Keith just informed us that rates went up like a quarter point today. And now you have to pay a whopping, 3%, Keith?
Yeah, whopping 3% for your money.
Still
Don't
be
let it
lower
break
than
the
anything I
bank.
had.
Yep.
Are you guys looking for more apartment deals?
Yeah, always. We've got direct mail out right now.
You got direct mail out right now. Would you ever do this? You just renovated your primary and moved into your off market, basically primary that you did there. Would you ever move into an apartment building in a urban village area that, that you could literally have like a penthouse on the top floor with a rooftop deck with views? Or are you now with your young family and you just got done moving into that house? So you're like, hells no, we're taking a break.
Well, I do hate moving. My camera is tilted up so that you can't see all of the crap behind me. No, I would move to a farm.
Okay, gotcha.
From the standpoint of dealing with the current things that the city and rental issues are dealing with, I'm kind of moving outside of the city for everything. I say that I'm also talking to some people about buying some stuff locally. So,
You mean you don't want to buy any more Washington apartments?
just Seattle.
Just Seattle, okay.
But like I said, I say that I'm currently trying to buy some in Seattle just because it's a good deal.
Yeah. Gotcha. Yep. What else? Well, I don't know. The rules are a little bit tougher, but I don't know if they're that much tougher. I mean, you just need to know what the rules are, right?
So for me, when, we're looking to reposition and raise rents and all that stuff, the new stuff that I don't think anything's gotten passed, but with this 6 months and paying for relocation services and all this stuff, that's adding lots of money
I think it is passed.
Yeah. So that adds quite a bit of money in the city of Seattle to any sort of, cash for keys or whatever you're trying to do there. And so that's, another level of money you need to add in, for everything else, as well as good property management, because there's a lot of changing rules.
Word. Is anybody here buying commercial properties or want to? Anybody? No? Right
I'll
on.
buy commercial property if, the deal's good.
Yeah. I hear you. What else is happening? Albert, what's up, brother? Oh, hey, Albert.
Hey guys, how's it going?
Hey, has Todd McKellips reached out to you? Do you know Todd?
Yeah, he's the king of micro units.
Yes, he is the king of micro units. I'm working on a deal with him potentially that I showed him off market. And for whatever reason, I believe he said he was going to reach out to you
Oh, cool.
on that.
Is that what
Um,
we're calling tiny homes now? Is
I
micro units?
Yeah,
think the Seattle definition of micro was like under 425, but not under 250 or something. Something like that. Then they have like CDUs, right? Small efficiency dwelling units or something.
have either of you guys financed any properties on the lending side that were sold and a new buyer was purchasing that had a dadu with a rental attached to it and it was part of the appraisal or value? Either Keith or Albert? Do you
Like
get
a
what
daylight basement type or an
No.
actual added on?
like an actual separate detached?
Detached
Oh,
ADU.
detached.
Mhm.
Yeah.
Go ahead, Andy.
My brother-in-law has done it twice now where he's bought a house, not a tiny house, but just like, a small 2-bedroom or 1-bedroom house that has a garage, done that and refinanced them. And so he's refinanced each one or one of them once and one of them twice. The first time he refinanced each one, the values came in much lower than what we thought, just based on it being, two essentially brand new houses, 2 incomes, all of that. But then he just had one refinanced again, and the value came in like 125 higher than the last one that was a year ago, just based on that, like they're kind of understanding, in our opinion, the appraiser understood like the value of this. So to me, there's at least been a little change.
Well,
on
there's been a shitload of appreciation though, so.
Well, and comps. The more comps we have, the better off we can actually assess the value of that detached.
I'm just wondering if they are, like how they are, is there some like appraiser guideline that anybody knows on how they're valuing? I have an off-market shoreline property right now that is so ripe, even though shoreline requires owner occupancy. Oh, does your brother-in-law want another one in shoreline? He's got to move into the house. He can move into the house, flip it, and then he's got to stay there to build the dadu. I'm meeting there. I'm going there at 4:30 this afternoon.
I'm
Shoreline.
getting probably 50 cents, 60 cents per square foot, or 50%, sorry, 50 to 60% of the main gross living area square footage.
Okay.
Typically. Those are converted spaces. They're not building a brand new dadu in the back. That I haven't done yet.
That is happening though.
Mine are all,
yes,
yeah.
Yes, that
yeah,
is
all of
happening.
mine are attached, but I'd like to do some more external just to see what the value add is.
So you're saying, Albert, because this is something my VIP crew is going to be focused on because it is huge opportunity for investors and for agents and to add value to whoever sellers you're talking to. You're saying that the financing that you've done so far has been where they've added a ADU in the basement or something, or right?
Yeah, they've converted it. They've made all the legal egress and code and electrical and everything.
Mhm.
But on title, it's still a single family. It's still a SFR.
And you think on the appraiser there, on the appraisal though, they got a 50% bump on that basement space?
Yeah, that was based on just looking at the other comps that didn't have ADUs or spaces that weren't finished.
Oh, that's interesting.
So they only gave us like 50. So let's say it was a $500 per square foot area.
That's a typical adjustment for below grade finishes.
Yeah.
You've got your
well,
above grade finishes
Yeah.
would be full market value. Anything below grade is going to be typically 50 to 60% of.
I want to give you guys an interesting thing. I like to say that I have a really good way of figuring market value on properties. Okay, it's worked for me. I've never changed it, and it has worked for me for years. And I just had to hardcore test it twice in the sense that I came into a market that I am not the expert broker, but I use data and my system to price the house. the other brokers that live in their long-term residence, right, of this area, right, came in and all said lower price than me. I said, that's totally wrong, because I used my system to price the house. And guess who was right? Yo, right here. I was right. Got a full price offer, $25,000 higher than all the agents that live in that community said it would sell for, right? And that's because I use data. I use my little data points to do that, which the reason why I'm telling you this, because it goes into this discussion about the ADUs in the basement. Okay. So if you had 2,000 square foot houses, you guys have heard me say this a million times probably. Okay. And I have training videos on this as well. If you have 2,000 square foot houses, they're exactly the same. They're in the same street, same level of finishes for this purpose right now. Okay. And one house, you're like 2,000 square foot houses, everything's the same amount of garage space, blah, 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 same finishes. Wouldn't they be priced the same? Well, no, because one could have 1,300 square feet on the main floor and 700 square feet in the basement. And one could have 1,000 square feet on the main floor and 1,000 square feet in the basement. Guess which one's worth more? The one that has more main floor space, because main floor space is worth more than basement space. Okay. Now let's say there's your concept 101. Okay. And this applies everywhere, even in California, I'm sure, Dante. Okay. This is appraisal 101. And when you're in a real estate broker, you need to know about appraisals, or agent or buyer or whatever, investor, because when you're making your investments, you're planning for your refinance, which means you got to plan for market value projection at that time, blah, blah, blah. So if, let me give you another little tip on this. If houses are selling for $400 a square foot, okay, and you have two next door houses in their same neighborhood, same school district, same construction style, okay, all that jazz, same finishes, but one is 2,300 square feet and one is 2,000 square feet, okay? If you're going to break that down per floor, how much on main floor, how much in basement, side by side. This is what I teach all my people to do. Line them up side by side. Now, let's say you got 1,300 square feet up here and you got 1,000 square feet up here, right? And the comps sell for $400 a square foot. Okay, I ignore that. I never even look at that. So we have a 300 square foot difference, right? If you were to take 400 square feet, what they're selling for, and apply that to the 300 square foot difference, right? Whatever that calculates to would be grossly overvaluing the property, because it don't work that way, guys. It doesn't work that way. The numbers that I use, I'm going to give you my secret sauce, because I put videos out there. Everybody in Seattle Investors Club can watch this video. Okay. It's in your membership site. It's worth, in my opinion, and I'm just going to say on the record, I'm rarely wrong on this. I hate to say something like that, but it's true. I take $125 a square foot. Now, if I was somewhere where homes were selling for $200 a square foot, I would change these numbers, right? But in general, I take for main floor space on the difference of that 300 square feet, I take $125 a square foot. If that difference in square foot is in the basement square feet is worth less than main floor square feet, and I use $50 a square foot. I'm telling you, it works like a charm, okay? It is factual. It is data driven. I can teach my sellers this kind of stuff. It's really good. So what I want to say is, when we're going back to the ADU thing, right? Since it's in the basement, and if Albert says, yeah, I am saying that there's a bump of $50 a square foot for finished basement space that's an ADU, what I would do if I ran into that situation based on the note Albert just gave me is, instead of using my $50 a square foot for the basement space, I would use $100 a square foot. Do you understand? Do you guys get what I'm doing? I'm using my same system and I'm adjusting the basement to be worth double that I normally would, because of what Albert told me, that his just if that was true, what Albert just said, it's a systematic way for you guys to calculate those values, right? Does that make sense what I'm saying to you? Are you guys following me? Right?
It does. And there's one kind of comment question I have, and Keith and Albert can correct me because I only have one experience with this. But a friend added a DADU, and the appraisal for refinance added $145,000 to the sale of the property, or to the refinance of the property. But the sale of the property was a $700,000 increase with this separate building on there. Is there a significant difference when you're doing an appraisal for refinance versus sale, or did we just have weird?
Say that again, Dion, on the, say that again. I'm going to take a note what you said.
So to refinance, it added $145,000 to the value of the property.
Yeah.
But they sold, and that appraisal, it added $700,000 to the value of the property. So it was like those appraisals were based on refinance versus sale, and they were significantly different.
Well, one thing is, when was the refinance? What date was that?
This was all within the same 2-month period. They were deciding to refinance or sell, and they had the refinance appraisal done and then decided to sell. So, I mean, it was like,
so what you're saying is, you're saying that how would you guys know, if you're on the part that sold it, what the appraisal came in at? I realize it sold for more, but how would you know what the appraisal came in at if you knew the people that were on the sale side? Because that
we did, because the sale side was the neighbor that was moving in their parents. So, I mean, we had all the data. This was just open communication with them.
Well, then we need to know who that appraiser is, or who that lender was that did the sale loan.
So this was in Arizona and Scottsdale.
In Arizona. Okay. Yeah. But do you get what I'm saying? That is interesting, right?
Yes. So here's what I found is the case to that, Dion, is appraisers are a lot more liberal when it comes to a purchase and sale contract in their hand.
Okay. Yeah. That's what I was looking for.
And the reason being is they have a buyer, right? Here's the factual evidence that somebody's willing to buy this at this market price. So they get to substantiate that claim of a purchase contract, and they can go out there and be a little more liberal. What I've also found on the refinance side of the thing, since the mortgage meltdown has casted both mortgage and appraisers in negative lights, the appraisers are very tight when it comes to adjustments and being liberal on a refinance appraisal, because they don't have anything to benchmark it off of, right? There's no, but I had a contract in my hand, so I'm just supporting this contract. They're like, I have no clue what the true market value is because I don't have that contract in my hand. So cool. I've seen it where appraisers on purchases will use only comps in the last 3 to 6 months, and where an appraiser on a refinance uses comps that are all 6 months old, 6 to 12 months old.
Bad.
And no, it's not bad. It's not bad. We can't call that bad, because that is part of appraiser practices, right? It's like, you can't call Trump bad because he uses the tax code to have zero income. He's using the freaking tax code, right?
No, but what I'm saying bad is because 6 months ago, properties sold for 10% less. Your comps are 10% less. I mean, it's a fact.
But this is addressing Dion's question.
Yeah.
Right. So this is addressing Dion's question. Appraisers on purchases have a lot more leniency, they're a lot more liberal, because they have that blanket, that security blanket of the purchase and sale contract in there. On a refinance, no, you could definitely see appraisers taking the conservative route. And I've had to go back and refute and rebuttal and do all of that stuff with that. So yeah, I'm not surprised, Dion, to hear that story. I'm not surprised at all that one gives it 150 on a refinance and 700 on a purchase side. Does not surprise me.
Thank you.
Yep.
Good answer. I think it would be interesting to find and seek out any sales that have happened with detached or ADUs attached. There's got to be, I think, a way in our MLS to do that.
Well, that's what I'm over here on Redfin right now, just typing in the keyword detached ADU, and I'm not getting anything, but I think the multiple is a little.
You know why? Because Redfin makes it really difficult. You can't even search on a Redfin by construction type. Like if I wanted to only look for split entry homes, I couldn't do that on Redfin. So you can do it in the MLS. And I
cool.
think it would be interesting, you
Yeah.
can search up Dadu stuff like on sales that have that. And then that is actually a starting point for investors. If there's a proven recorded sale of that, you can literally use that as your launch period now to go find off-market deals around there. I'd go to the point even where I would call up the buying agent on that. And I would say, hey, how did your appraisal go? How much credit did you get? Just curious,
Yeah,
right?
absolutely.
And then I would use that if I was an investor, giving you guys a little secret note here to like go start from there.
Build
right?
your pro forma, baby.
You have
Build it out.
now you have go find your deal based on a recorded comp.
Yep.
And we'll reverse engineer backwards into, so you know that you have better underwriting numbers for doing something like that. You know what I mean?
And renovation loans allow you to put in a detached ADU. You can use them.
Yeah.
Do it.
Right.
That's a really good tip because I've been looking into houses that I can rent by the room and also do detached ADU and junior ADU. But my idea is I would like to keep it. So if I'm spending, $200K in construction for both of those, I would like to get some money back or be able to pay that construction loan somehow. And I just can't trust that there's enough appraisals. So if I work backwards the way you guys just said that would totally work. Yeah.
Cool. Yeah. Interesting, right? Yeah, I think part of the problem as doing this as an investor, right, is that you just, I guess there's only certain cities, at least in Washington, that you can do that right now.
Yeah, because of the occupancy requirement.
Because of the occupancy requirement. I imagine that's going to change for more cities like Shoreline. You know what I mean?
I got to jump. Have a good week, everybody.
Yeah, see you. But that's an interesting, I think it's interesting, that whole discussion. So I agree with Keith. We should probably wrap up here at 12:30. So good talk. Anybody else have anything they want to add or all that jazz? Kevin, do you want to say something real quick before we jump off about your new affiliation?
Yeah, actually. So I'm working with a group called Sunday Inc. And we're essentially like a marketplace for off-market properties for investors. So we're launching the Seattle market right now, and it's essentially, I call it the Zillow meets eBay for properties. So if you guys are still looking we do mostly single-family residential. So you've got good opportunities coming up for rentals and or for rehabs. So if you guys do want to be on the list, just let me know, and I'd be happy to add you on there.
Or if you're looking for a personal, flip to hold for your primary, like Andy just did, you might find one on there once they start getting some properties on there, right? Essentially, it's, kind of like an off-market MLS-y type of thing. So,
right.
Kevin, how can I contact you?
I'll put my contact info below. That way you guys can reach out to me if you need anything.
Thank you.
Right. So you guys are going to want to sign up maybe and just is it free?
Yeah, the platform itself is completely free. Then when you actually buy the property, there is a 5% fee that we charge for that.
So any property you purchase off Sunday, you have to add a 5% premium for their platform fee.
Well, it'd be the other way around. We take whatever your gross price is and we take that off the top, and then so we don't add the fee. We just take it off of what your max allowable offer is.
Same thing. You're still paying for it as the investor, right?
Right.
Cool. Awesome. Well, let us know when you get some properties on there. Do you have any on there right now?
We've got a couple of appointments, but nothing officially on the marketplace yet. But we are operating in like 9 other states. So if you guys are investing out of state, it's a good place to check out. We're in 3 cities in San Diego, LA, Bay Area, and then out in Texas, Florida.
Yeah, Dante, you might be interested. You ever heard of Sunday down there?
No, I just Googled it.
Yeah. I don't think by Googling it, actually, it actually says that this exists. It says, I'll buy your house for cash, but it doesn't really discuss in what I've seen, maybe I'm wrong, maybe it doesn't discuss, the website doesn't seem to, you tell me if I'm wrong, Kevin, discuss this platform for investors, unless there's like some investor link on the website. All the stuff I see about Sunday is, hey, we'll buy your house for cash, kind of like lots of other people, not this behind the scenes thing.
Yeah, I mean, it doesn't show you the platform just because of like compliance issues, but it does kind of give you a breakdown of how the platform works and what you can get access to. So I just sent the link there for you guys as well to check it out if you are interested.
Kevin, did you confirm whether or not you guys were members of the MLS or not here in Washington?
I gotta check with Polly R, designated broker.
Let me check. I'm gonna look and see if she's
She is listed on MLS.
as a broker in Washington.
Yeah.
Doesn't matter for this conversation today. I'm just curious.
Mhm.
All right, guys, we're gonna wrap it up. And we shall see you next time. Good stuff today.